So, it's Monday morning, it's early, and I took the weekend off, but here's a review of what happened on Thursday, Friday. So, COVID is ravaging Europe and the rest of the world, and one of the interesting things that I have read is that COVID 19 is the great equalizer. It hits us all evenly. It doesn't discern. But I find that so untrue. There's absolutely nothing equal about COVID-19 because those who are wealthy, they can seek professional help to a far greater extent than those who are poor. I mean, take a look at people, for example, in Yemen. They are being abandoned, reckless abandonment. So to say that COVID-19 is a great equalizer is just plain not true. Anyway, I don't mean to be political, not at all. This is a more humanitarian comment. It's been a difficult time because for those of us who are parents and have children, young children, old children, well, I happen to have both. So I have a young child and I have a child in its 20s. And for the child in his 20s who's fresh out of university, well, how do I explain that you just gotta keep at it, keep searching for jobs, but there's no jobs around because who's hiring? And for the young child, how do you explain that you can't see your friends, you can't go to school? And homeschooling, it may sound novel and it may sound romantic, but I assure you on day 2 and day 3, it's pretty intense, and it does test that whole relationship between parent and child. And I have a newfound nod and respect for the teachers of our nation, of any nation. How you go into this profession and stay there is beyond my patience and abilities. So kudos to you. Anyway, this is supposed to be about the financial markets, but sometimes it's nice to just take a little divergence from the normal path and bring in the larger perspectives of life into the equation, because that's also what is affecting us in our trading. I stand accused quite frequently of being too bearish the market, and I accept that, but I find it an incredibly short-sighted view to think that with 20 odd years of market observation experience, note that I said observation, I didn't trade for 20 years, that you expect me to believe that all is well in the stock market, because I don't. If I can't get a job for my old child because there's no one hiring, how can you reconcile that with a stock market that's never been higher? Well, yeah, liquidity. Of course, yes, I accept that, because where else are we going to put our money if not in the stock market and Bitcoin in the property market? But that to me does not necessarily equate a healthy stock market just because interest rates are zero and we can borrow so we can load up on Tesla and Bitcoin and whatever else. But maybe I'm getting old. It's quite possible. However, when I draw the technicals, I see things like this, and I'll discuss this in a second, but there is a reason why I am negative in the market, and considering my experience with time cycles, I can't completely ignore this. And the reason why I can't ignore this is because it's the very same time cycle that absolutely allowed me to nail the high in 2020 and ride the COVID wave all the way down and having an absolute time of my life, so to speak. But we'll get to that in a second. 14th of January. This is a trade that I didn't actually call, but it's just a perfect example of what technical analysis really should be all about. It's about having the patience, observing the setups, and then when the time is right, you place your trade, and you've done your job then. You put in a stop loss, and you hope for the best. You don't know what's going to happen in the future any more than anyone else does. So the best that you can do is just to play the odds continuously over and over, take the same trade setups. This, it annoys me that I didn't actually call this, but the reason why I didn't call it was because I had to have a stop loss up here, and I felt, well, it's a little late. I shorted myself around here, and at the time I felt, well, it's a fair distance between my entry and where my stop loss is going to be. So it was more a case of taking a setup and illustrating what technical analysis really is all about. And a little bit later on, I really did kick myself for not calling it. But you know what? It happens. Sometimes I don't make calls that turns out to be great trades, and other times I count my lucky star that I didn't make the call in the Telegram group. But trading is a game of chance, and you just gotta play the odds over and over. And that's, of course, is difficult because very few of us can get knocked down 5 times in a row and then still stand up on the 6th time. But that is what we are being paid for. We are risk takers. And combine that with being patient, well, then the financial markets is a great place to be. Now, I went into Thursday's trading thinking, right, maybe I am too negative. Maybe I really should consider taking the long side. So I saw this tight channel in the DAX, and I decided, all right, let's join the bulls. Let's actually jump on board. And I went long DAX. Now, it just so happened that it didn't actually turn out into anything. I moved stop loss, but when a little bit later on in the morning, I looked at the NASDAQ and I saw this beautiful double top and then this attempt to break out, and that failed, and it failed spectacularly. So down here, I thought, well, sort of a bit of the same pattern here. I think I'm going to short the rebound. So on paper, down here, it all looked perfect, and I was set for more downside. It's not quite what happened, but I shorted at 12,947. I am annoyed that I didn't get in here, but as I mentioned, homeschooling and shopping and queuing up in the supermarket and wearing masks and gelling up and all these things kind of takes your attention a little bit away. It isn't a distraction, and I'll just have to live with that for as long as it stays like this. You're probably familiar with the HBO series called Billions. Pretty cool series, especially if you're a trader. And there's a guy there that I quite like. His name is Dollar Bill. And Dollar Bill, when he gets into a trade, or before he gets into a trade, Axel, he asked me, how certain are you? I said, I am not uncertain, which is, it may have acquired inside information. That's not what I'm talking about here. There's no inside information in the NASDAQ, but I am not uncertain that the NASDAQ was about to head lower. Unfortunately, I was right, but I was right a little too soon. See, I placed a stop loss above 13,021. I decided I'm going to give it another 9 points. May, in hindsight, have been a little bit too ambitious about that. Maybe I should have gone 13,040 just to give it a little bit extra time, a little bit extra points. And that cost me. The high was 13,036, after which the NASDAQ truly fell out a bit. Frustrating? Of course. What's even more frustrating is that on the way down, I was engaged in other things which led me to not be on short again. Because, you get stopped out, but if you get the signal, you go back in. Of course you do. But in this case, with everything else that's going on, that just didn't happen. So 6 points separate me from failure and fantastic joy. 6 points. I had a long position in the DAX, and I had actually moved the stop loss to break even, and I did get stopped out for nothing. And I just made a comment to people saying, I'm sure that you're watching this as well, and it's a kick in the teeth. I don't need to tell you this. That leads me to the 15th of January. At this point here, this is a screenshot from a broker's account where you can see the entries on the screen. You can see here this wasn't the most fantastic entry, but I consider this to be an extended bar, or like a road sign saying, well, this bar is significantly longer than the prior bars. It's a bit like this one here. It's also an extended bar. And I thought we're headed lower. We're headed higher. So I started buying the DAX pretty heavily. I think I was long about 3,000 Danish kroner a point, which is about $400 and about 300 pounds thereabouts. And I had a stop loss down here. So it's a pretty liberal stop loss, I admit. And this is the setup. You have a pretty tight trading range, and you're beginning to break lower. But if you really zoom in on what's going on down here, which is a double bottom, if you're really zooming in what's going down here, then you had this double bottom formation, which is this stuff here. And then you had this bad boy here, which I call an extended bar. Now, I would have been a lot happier if the market had actually closed up here, but the fact that we then began to push above this high on a subsequent level, and I think this is a 15-minute bar, I decided this is where I need to get in. And I started buying somewhere around here. So you can see there wasn't a brilliant entry. And I announced this to the Telegram group. I was in around 46, and I think they were able to get in around, I think it was I haven't actually posted that, but I think they got in about in their 20s. So they were in about 20-25 points better than I. Now our market actually went lower, and as I made a little comment, remember her? She's from that hospital series called Scrubs. Fun series when it happened. It was back in the noughts. That was a laugh. I used to come home Friday night and like buy a beer, a takeaway, and then watch Scrubs. Ah, yes, those are days. And I made this comment here. The market is so strange. But now I have to go out and do food shopping. Yeah, it was about 10 in the morning when that happened. And then this happened. And this point was actually what drove me to short Nasdaq again. And having a pretty decent stop loss. Making a comment how frustrated I am. When I saw this pattern here, this is where I went long, and this is where I got stopped out. I was absolutely certain, without a doubt, that this was it. We were headed lower now. This was the 72-week cycle, really in force. It was Friday. Everything was ripe for the market headed lower. Absolutely certain we were going down, and we did. And I shorted it for absolutely everything that my account would enable me for. It was the Nasdaq, it was the Dow, it was the DAX, the FTSE, all in, absolutely squeezing my account to the very limit of its margin abilities. And then it happened. Internet outage. Now, I have good friends who work in the brokerage industry, so I know that many companies will rely on other companies for their feed. So please, this is not criticism of anyone, but for example, what we know as CMC Markets is a broker, a CFD broker, but what many people don't know is that they are also a liquidity provider and a liquidity feed. So they feed prices to other brokers. So they have an institutional feed. And from what I understand, on Friday afternoon, the feed, i.e. the prices that CMC sends to other brokers, went down. And what I experienced was that I had absolutely no internet access. That meant that all of a sudden I had to grab the old mobile phone and start making phone calls to move stop losses, etc. And it basically disabled my entire view. I had absolutely no idea what was going on. And while that was happening, the market just imploded. It was odd because I could access certain websites. I didn't know this, but Amazon is not just the place where we buy our hand soap and our, whatever else we buy on Amazon. It's also an internet service provider. And I have a suspicion that actually went down temporarily as well. So when all was said and done, I think I made about 10 points in the Nasdaq, which is an insult because it was actually down about 140 points in my favor. And I was unable to alert the Telegram group to moving stop losses or taking profits, or even, as I like to do, add to positions when they're going well. So this I took a screenshot just before it went down, and it sort of gives you an idea of the size of my profit here. I'm about 50-odd thousand in profit, but at its best I was about $250,000, about £200,000 in profit, which was at that point I had more than doubled my account. And when all was said and done, I ended up losing about $20,000-30,000 odd. So this is what it looked like afterwards. So that is the kind of Friday I'd like to forget about in a hurry. It was pretty demoralizing. I did catch later on in the evening when I was by myself, I did short the Nasdaq. I'll show you this, but at that point I just had enough. So this is what actually happened. The Nasdaq fell out of bed really quickly, and it was during this period here that the internet outage was. Then back up here, we actually made a classical double top pattern, and I got short around here, but it was quite late in the day, and I'd had enough blows to the balls, so to speak. And this is the Dow Jones, just as a comparison. So while the Nasdaq didn't recover up to the old highs, the Dow Jones did, and then it fell out of bed. And actually, as we speak this morning, the Nasdaq has made new lows. Okay, so let me try and give you an update of what's actually going on in the big scheme and why I am so negative. Because I know that there are people who are calling the Dow Jones for 40,000 and the Nasdaq for 15,000, and DAX at 20,000 and so forth. Great, I love these prophecies. They are interesting. They're often what should I say, announced by people who are swayed by their own position. So before you buy Bitcoin, you might be thinking, well, Bitcoin might go to 5,000. But once you buy Bitcoin and you get sucked into the whole euphoria of the bubble, you begin to come out with outrageous forecasts like Bitcoin at 20,000, Bitcoin at 50,000, Bitcoin at 146,000, as in the case with JP Morgan. It's a bit like that Monty Python movie where there's a gentleman in court and he's being convicted of an offense, and the judge is asking the audience, how many years sentence should we give him? And 2 years or 5 years. And then the euphoria builds in the audience in the court of law, and all of a sudden this woman says 1,480 years, and everyone went, wow, it's like an auction. That's what it feels like when you're caught up in the euphoria of a bubble. Do I think Bitcoin is a bubble? Absolutely, categorically. How can it not be? Do I think Tesla is a bubble? Yeah, I do. And it's based on the merit that a PE ratio of 1600 for Tesla. Why would you? How can that be justified? What? Because they're also sending up satellites and installing internet. Yeah, sure. They've covered about 2%. They have 98% to go. So you're buying into a euphoria which has a lot to deliver. And when you lived through the bubble of 1997, 98, 99, the whole tech bubble, and then again the euphoria of 2006, 7, and 8, you don't just forget that, because you realize that the stock market is not just a reflection of the fundamentals that are driving the economy. It's also a reflection of our euphoria. And human beings, well, we have this optimism and pessimism. It's like a pendulum, and it swings, and it swings excessively from one end to the other. It's just human nature, and it's very hard to measure that. But when you look at charts such as this one here, this high here, which is so far the high of 2021, well, I've forecasted this as being a 72-week cycle from this, not a particularly inspiring low, but it was a low back in 2019. So there's 72 weeks here, but I thought I would update you on a different aspect to the 72-week cycle, which is the 117-week cycle. And the significance from 72 up to 117 is that 72 times 1.618, which is a Fibonacci ratio, gives me 117. So if I look at this high over here in 2018 and I project forward, well, that gives me 117 weeks. So it's not just the 72-week cycle that makes me skeptical. I'm thinking this market is headed lower. So the significance of this high over here in 2018, well, that high is the very same high that I used to absolutely nail the top in 2020, and that allowed me to be short the market way before anyone else really was open to the idea that we were going to have a COVID crash, and that's exactly what happened. So now that very same high over here is projecting forward to the top here in 2021, or what I think is the top in 2021. Now, 117 weeks. Did I just grab this out of thin blue air? Not really. I've seen this before. So I called for a high back in 2007, and I didn't know at the time that it was going to turn out to be what it turned out to be. But it was nevertheless a 72-week cycle from here to here. But at that same point here, that high was 117 weeks from this area here, this high here. Now, I agree with you. This doesn't strike me as a particularly convincing high. Nevertheless, it took the market 16 weeks. That's about 4 or 5 months before it superseded that high here. So I think that it does have some validity, which is why I included it in my projection back in 2007. And this is the reason why I was short during the crash of 2007. Now, I'd love to be able to say to you that I shorted it here and I covered it here. And you know what? There's 72 weeks from high to low. Perfect. But no, I did start buying down here because I noticed it was the 72-week cycle. But I wish I could tell you that I was short here and I covered down here. That would be a lie. Right. I think you're updated. I hope you have a fantastic week, and I will see you during the week. You take care of yourself wherever you are. Look after yourself. Look after your loved ones. Stay safe.